Assalamualaikum warahmatullahi wabarakatuh and good morning. We'll continue our discussion on merchandising operations. After we have recorded all of the transactions, made the adjustments, what we need to do is to prepare the income statement. Okay, so for merchandising operations, there's some uniqueness in terms of the income statement. Okay, so organizations have the choice of using a single step income statement, which we have been using all this while, and they also have the option to use the multi-step income statement. Okay, so what's the difference between the two? Well, we look at the multiple step income statement. It shows several steps in determining net income. Okay, there's several steps there. And two steps that relate to principal operating activities, and it distinguishes between operating and non-operating activities. So operating activities are activities that are essential to run the business, whereas non-operating activities are those usually additional to the core business. It's not part of the core business. Okay. Let's see the example of the accounts. Okay, so this is the multi-step income statement. Okay, so the first part here is the net sales. Okay, here it shows all the figure regarding to the sale of merchandise. So like I said, sales revenue and sales return and sales discount are used in separate accounts. When there's been sales return or sales discount, we do not deduct it directly from the sales revenue because we want to preserve that important information. But then the net effect is still the same. Therefore, we need to show that those components in our income statement. We make our header a sales header, but under sales we will have sales revenue, a certain amount here, 480,000. We deduct sales returns and allowance and also sales discount from that amount. Therefore, we deduct $20,000 from 480, and that comes to the net sales. Okay, the net sales of $460,000. Okay, so the net sale arises because of sales returns and sales discounts from the sales revenue. Okay. So that's the first part. There's an area where we need to calculate the net sales. Okay, and then secondly, from net sales we will get the gross profit by deducting the net sales with cost of goods sold. So after we have a section on sales that comes up to the net sales of 460, we deduct the cost of goods sold. So there's one item called cost of goods sold. This comes from our cost of goods sold account. By 316,000, so sales minus cost of goods sold equals gross profit. So our gross profit is 144,000. So that's the next section. The following section is our operating expense. So after we obtain our gross profit, so gross profit comes directly from the sale. So it's a matching between the sales and the cost of sales or cost of goods sold. We obtain the gross profit, but we also have other expenses that need to be undertaken in order for the business to run. So we have the salaries and wages expenses, we have utilities expense, advertising expense, depreciation, freight out, and insurance expense. So those things are included in the operating expense. Okay, so these things are included in the operating expense. So the gross profit, after we minus the operating expense, then we will get the income from operation. Okay, we will get the income from operation. After gross profit, we minus the operating expense here. But after the income from operation, we also have other revenues and other expenses. Okay, so these come from non-operating expense. For example, interest revenue. Okay, so interest revenue, somehow the company also invests in or put some money in let's say long-term deposit in bank. and they obtain interest from that. So that is not their core business. The core business of this particular company is to sell items. Okay, so interest revenue is not part of their core business, therefore it is put under other revenues. It's not part of the sale, but it's part of other revenues. And gain on disposal of plant assets. Okay, so a company that sells items, their core business is sell merchandise, but when they sell off their plant assets, due to probably the what do you call it, downsizing, for example, they may receive some gain, but that is not part of their core business. Therefore it is put under other revenues and gains. And similarly, there are other expenses and losses, include interest expense. Sometimes they need to borrow money, so they pay interest, and casualty loss from that vandalism. Okay, so these are examples. There are some other examples as well. Other revenues and gains include interest revenue, we've mentioned before, and also dividend revenue. Okay, if the company invests in stock in some other companies, that is not their core business. Their core business is to sell merchandise, but they also invest in capital stock. So the dividend that they receive is other revenue. Rent revenue, if they lease or they sublease their portion of their store, okay, and gain from the property, plant and equipment. These are other revenues. And examples of other expense and or losses is interest expense, I mentioned before. Casualty losses from recurring causes such as vandalism, accidents. So these are not part of the normal operating expense. Loss from sale or abandonment of here, this is just the opposite of gain from sale of property. Sometimes when they sell off their property, they made a loss. Sometimes they make a gain. Loss from strikes of employees. If employees and suppliers make strikes, so that is beyond their control, is beyond their normal operating activities. Okay, so that is part of other expenses and losses. So after deducting from the income from operations, we add the other revenues but deduct the other expenses. 30,000 plus 3,600 here, but minus 2,000 here, we will get to a net income, and that in net income is 31,600. Okay, so this is why it's called multiple steps. So the first step is to obtain. The first step is to get the net sales. The second step is to get the gross profit, and from the gross profit is to minus the operating expenses to obtain the income from operation. And then the income from operation, we include the non-operating activities, and finally we will get the net income. So there are several steps here. That's why this is called a multiple step income statement. Okay.